Hi everyone, welcome to today's video. So I believe that in the markets right now, this is a great buying opportunity for the next bull run. Both Indian markets and the US market seems to be good from a buying level point of view. I will help you understand my logic. That's the first thing that I'll do on this video. And second key thing that I'm going to go stock specific / index specific and give you some commentary on some good stocks. Now, this is not a buy and sell kind of a video. Please watch it from an analysis point of view. This is not a recommendation that you go and buy stocks or whatever it is. I'm just giving you adequate information so that you can accordingly design your portfolio. Now, my personal situation is that I'm 100% invested in the Indian market. Whatever money I had to invest, I'm done, right? I'm fully invested in the Indian market. I'm expecting a bull run. In the US market, I'm roughly 55-60% done. Now, in case you're a serious investor looking to build your portfolio in the US, you can check out my US based stock investing community in the description and comment box. Feedback has been excellent. We are already have generated roughly like 12-13% alpha so far. Okay. Also, all of us are very excited about building our wealth, but at the same time, we need to focus on our career. One great way of improving our career is to learn about AI and trending skills. So on this note, I highly recommend you joining this 2-day weekend AI training program, which happens completely free of cost. It's usually valued at rupees 10,000, but I'm thrilled to offer it to you completely free thanks to our partners for today, which is Outskill. It is the world's first AI-focused learning platform, which is backed by renowned AI investors and AI founders. This 2-day program offers 16 hours of live AI training spread across 2 days, and it's happening on coming weekend on Saturday and Sunday between 11 AM and 7 PM. As I mentioned earlier that this costs usually 10,000 rupees, but it's completely free of cost if you use the link to sign up. On this program, you will learn about 20 plus AI tools to build AI toolkit, prompt engineering to achieve incredible results, data analysis without coding, using AI in Excel and creating professional dashboards efficiently, building tools with AI without writing code, creating stunning images and videos, developing AI agents, and automating your work. Now, this workshop is beginner friendly and can be done by anyone from any kind of a background, be it HR, finance, freelancing, marketing, operations, and even business owners. Slots are filling up fast, so please check the links in the description and comment box to sign up. Now, with that said, let's move over to the main video. So let me jump right into the conversation, and please watch this video till the very end. If you watch half of it and just act upon it, it will not make any sense. So please watch the complete analysis, and I'll be quick. I'll pack a lot of things. So let's first study Nifty 50. This is the Indian market, and what has happened in the Indian market is that you will see this gradual decline, right? So I have already marked this. This is a valuation correction, right? Indian markets went little bit overvalued. Then the valuation had corrected. This is the valuation correction zone till here, okay? Then there was a breakout here, this entire phase. Then there was a breakdown due to Trump tariff here somewhere, okay? And then the market are again up. Now, the likely situation is that we are going to cross this channel, make a new high. Now, a new channel might be created something like this, and the Nifty will go something like this. Or another possibility is that we might go like sideways like this, right? So these are the two possibilities that I see right now in the Indian market. I am betting on this red channel as of today. So if that happens, now that will be a start of a new bull run. Why? Because a valuation correction has already happened. We have bottomed out here. This is the logical, sensible analysis. News channel are not going to tell you all this. Okay, their job is to sensationalize everything. I'm just genuinely telling you what I am doing as an investor. This is one. Now, what about the US market? So let's study QQQM, which is Nasdaq. Here, what you will see is that this is a parabolic fall. Here, the fall is very, very sharp. Now, on my US based investing community, we had already purchased Nasdaq at a very good level. People right now are anticipating that, you know what, Nasdaq or niche jayega, all that stuff. Might not. I don't know. This parabolic fall might continue. Who knows? But to cut the long story short, I am betting on a bull run even here. I don't anticipate the entire correction on Nasdaq to go above 30%. Okay, so now you'll say that, okay, here there was a correction of 34%. This was the 2021 to 2022 correction. But again, if you observe this slope, this resembles what is currently happening on Nifty 50. So this was the valuation correction phase. And this phase, this parabolic fall here, the current one, this is more of a parabolic fall, and parabolic falls typically happen due to uncertainty in the market. So natural question comes that why am I betting that this will not go beyond 30%? Very simple, because Trump tariff thing is mostly resolved. Now you'll say, yeah, this is the ajeeb baatein kar rahe ho, right? I mean, how is Trump's situation resolved? See, a lot of clarity has come in, right? So they have isolated China. So US has categorically said that, hey, we are not fighting against the world. We are only fighting against China. Okay. This is the first key critical information or clarity that has been given in the market. Second is that even on electronics, like Chinese originated electronics, I think there has been some relaxation that has been given. So now no one is taking like this entire tariff thing very seriously. Initially, when it started out, there was a lot of seriousness. Yeah, such mein, like, you know what, okay, Trump is going to go mad or whatever. But now nothing of that sort. Even they understand that US is going to back down. Even it is in US's best interest to sort out this tariff issue very quickly. So this was an uncertainty thing. The moment this gets corrected, the markets are going to rally here. Okay. So therefore, if the India market is also rallying, US market is also rallying, then what will happen, right? That's a start of a new bull run. Now, I don't know till when it will last. Correction, of course, will happen along the way, but generally a good time to buy, generally a good time not to be holding crazy amount of cash. Okay. So this is my overarching analysis. Now let me go stock specific, that what are the stocks that I'm bullish about. Okay. So let's start with US first. So in the US, a lot of talk has happened on something like Google. Okay. For example, if you check it from its peak, Google had corrected by roughly 32%. Okay. यहाँ पे I have purchased भर के. Okay, so I have purchased a lot of stocks in the US in this zone, right? When this channel breakdown had happened. Lot of fund managers from India are saying that, you know what, Google is dead, no business left, because these days I'm using Perplexity and these days I'm using like ChatGPT and these days I'm using Grok and all that stuff. And I'm not searching like Google, right? Now this is superficial understanding of Google's business. Now, if you actually uncover Google business, basically approximately 60% of Google's revenues come from search. Okay, so 60%. Now you'll say search means only Google search. No, in terms of Google, they offer a suite of services. For example, they offer email, they offer Google Maps, they offer documents, right? So Google Docs and all that you see. So ads are shown on this, and that entire thing is called as search, right? So this is called as search revenue. Now here is the overall revenues of Google year-wise, and you can see that the revenues for Google are increasing. So it's not as if that Google is on some slippery path. You will say that, okay, see, all this Perplexity and agentic AI and whatnot, this is all started to pick up in 2025. So Google to gaya, okay. See guys, basically like if you look at the last big war that Google had fought on advertisement revenue, whom did it fight against? Well, it fought against Amazon. Now how Amazon? For example, Amazon's ad revenue growth rate has been one of the fastest, and it has taken a lot of market share away primarily from Google. Okay, so it's not the first time that Google is fighting this advertisement revenue war, right? This is one. And when did this escalation of Amazon in terms of its ad revenue started? Well, this started back in the year 2021. So between 2021 and 2024, Google has already fought this war, and it's not as if that it has gone down in business performance. No one is using Google less. Okay, so you are still using Google a lot, right? And you're getting to buy the company at a significant discount. Your wish, you want to buy, not buy, that's your call. I cannot say anything. I'm just helping you understand the entire picture, because you will read some random dudes commenting on the fact that, you know what, okay, Google, I'm using like Perplexity these days, I'm not using Google search. That's superficial. Okay, that's not how business analysis is done. So please don't act because of that. Do your own analysis. This is one. Now, out of M7, there are multiple good stocks, which I will communicate in my community also when exactly to add it, because almost all M7s are good. It's not as if that they are bad companies. It's just that you have to understand the right time to buy. Okay. So that becomes really important. And M7 stocks also have a lot of volatility, right? So for example, you'll see this dip on Google. You will see this dip, this entire dip on Google. So there is a lot of dips that happen, and therefore aggregating or picking the right time to buy these type of stock makes sense. And again, I'll push that in case you can afford it, definitely do join my US based stock investing community. People have given excellent feedback. People have loved the experience so far. And if you are a serious investor, do consider checking it out. I detail out almost on everyday basis whatever I'm doing. And at this stage, I am building a big portfolio in the US. Okay. So this is one. Now comes Indian stocks. So let me first and foremost talk about Nifty IT. Now what you will see is that Nifty IT also, like Google, has corrected by roughly 33%. Okay. Now I'll say, yeah, same story, that it makes sense to buy like Nifty IT. Okay, so here are a couple of problems, right? Number one is that there is what I'm witnessing in the Indian market right now is that mismatch between index, Nifty IT index, and the ETF if you buy. That's a topic in itself. But honestly, this is personally that I have witnessed, right, on my community also, that people are buying ETF, right? So they will go buy ETF, and ETF and index are supposed to be same. For example, if you buy, let's say, Nifty Bs, right? So this is what? This is an ETF of Nifty 50. Okay. Now, ideally, the index and ETF should suppose or should behave exactly the same. If there is a 5% drop on index, then ETF should also fall by minus 5%. Okay. But there is a tracking error that is happening, and this is becoming more and more. So this is becoming a nightmare to buy like ETFs in India. And even if you place like, you'll say, Acha, theek hai, I'll not buy ETF, I'll buy index only. You'll go via the mutual fund route and it will take you 2 days for allocation. Now, we don't know what date they will give. So this is a genuine problem that I'm facing. But again, this is not a cribbing video. I'll just tell you like my analysis of Nifty IT. Nifty IT is not bad. You can pretty much consider building some position on it. I'm not doing it because honestly, I'm getting like companies like Meta, right, which are at great value. I bought a lot of Netflix, okay, great value, right, at right time. I would assume that I bought it. Google, I gave you an example. Now, these things are way, way stronger than something like Nifty IT because Nifty IT or Indian IT companies are likely to grow due to second order effect. Now, what is second order effect? The first order effect is that US and Europe need to be pro business, okay? And they will throw some business towards Indian IT and therefore we will grow. Now, if you don't trust the number, here are the numbers. You can go and check how much export dependence Indian IT has. Now, due to the rise of artificial intelligence, machine learning, automation of different tasks, automation of software generation, I don't know what the future of Indian IT looks like. So therefore, like investing money here, now if I have a choice to invest like 1 lakh in Indian Nifty IT or 1 lakh in Google, I would definitely pick Google or even just NASDAQ. I think that makes more prominent sense. Then comes that, okay, now then what type of stocks will you pick in India? So I think finance works really well. Very happy with my bets. A lot of people made fun. Idiots, like absolute idiots. Sorry to say it, right? But honestly, if you had no guts to buy like something like HDFC when it was available at massive discount, it saved everyone, right? I mean, people who are holding decent positions of banks like HDFC, private banks, all that, they have done exceptionally well. So just let me show that to you, right? And again, we will just take a look at maybe HDFC, right? How much returns it has given. So last 1 year, it has given roughly 20.77% return. And if you take a look at Nifty 50, last 1 year, how much return it has given? It has given 2.5% return. So it's approximately like whatever, 17-18%, right? Now that's huge alpha. That's approximately 1.5 years worth of return, right? So that's honestly the case, right? And is now people are imagining that, you know what, HDFC will not grow and all that stuff. See, now let's quickly discuss HDFC Bank also. Now here is the situation that if you take a look at the PE ratio, the PE ratio seems fair, okay? Business of HDFC Bank is very, very solid. To cut the long story short, even now it is at a good buying level. If you're buying something for 2 to 3 years, again, not a recommendation that you buy, okay? Now I'm just suggesting ideas. You pick and choose whatever you feel like, okay? So according to me, private banks are really good. You figure out whichever ones you want to buy. Something like Asian Paints, right? So let me just quickly give you an example that why something like Asian Paints or paint-based businesses are likely to do well. 2-3 triggers. Number one is that Diwali is going to come in next 5-6 months. Now that generally is a very good season. Number two, the reason why Asian Paints corrected, there were 2 reasons. One is that massive rise of competition in paints industry. Now you yourself think, why would a bunch of different people, Godrej Paints and all that, will come into paint industry? Because why? That industry is useful. You can make money in that industry. Therefore, people are coming in this industry. So it's a lucrative industry to begin with. So that competition thing is already sorted. Those players have already entered, and jo bhi correction hona tha on Asian Paints has already happened. Okay. Second key reason for correction was that the rise of input cost, that due to inflation, input cost or manufacturing cost for Asian Paints went up like crazy. So what has happened, and which is the primary fodder for making like paints? Well, it's oil prices. Now, oil prices from its peak have corrected by 50%. So what should ideally happen on stocks like Asian Paints? Ideally, it should come back up. That's the idea. And again, you can see that the volume is increasing for something like Asian Paints. It is available even below its 200-day moving average line. So from that perspective, it seems okay. Now again, not a push that you buy this stock only. You go and figure out whatever you want to buy. I'm just giving you macro commentary. Okay. Now this is the next point. Now, if you want to figure out like some stocks that could potentially like 2x, 3x and all that, then you need to buy companies which are at fairly low PE. So for example, I'm just picking the example of Motilal Oswal Financial Services. Here you can see that the stock PE is only 11. Okay, now is this a good company? Okay, so let us try to figure out. Bhai dekho, sabse pehli cheez, right? That it gave a run up and it is corrected by a lot. So for example, it used to be at roughly 1,000 rupees. Now it is at 600 rupees. So 40% correction has already happened on this stock. Volumes are very good. Is it generating revenues, profits? Yes. So if you look at last 5 years compounded profit growth, it's 53%. And in last 5 years, the stock hasn't given it has only grown at like 36% CAGR, so to say. So still some room to grow. So to cut the long story short, you need to identify these type of companies. Again, not a push that you go and buy Motilal Oswal, all that stuff. I'm just giving you some examples. So these are the type of stocks that I'm bullish on in the Indian market. I will be maxing out my positions on finance stocks very soon. In fact, banks I have already done complete position building a few months back. Some individual 2x, 3x type of finance companies I will be picking, and I will be investing more money in the US market also. And one segment that I am bullish on right now on the US segment is their small cap index. Now the reason why I am bullish on small cap index, and let me just quickly show that to you on charts also. Now in the US, there is an index called as Russell 2000, right? And let me just quickly present an analysis for it. So you will see that from COVID, it has only gone up by 5%. Okay, so this is one. If you go back even, right? So if you extend this and stretch this to 2018, so almost in 7 years, it has given only 5%, 6% run up. Okay, now this is like crazy. Okay, so now comes the natural question that, okay, maybe like small cap businesses are useless in the US. So two triggers there. Number one is that interest rates have been fairly high from 2021, right? So 2021, interest rates went high. When interest rates are high, small cap companies struggle. They shut down because they are unable to procure debt. That's problem one. Problem two is that in the US, manufacturing was not promoted. Now, some bit of manufacturing will start happening in the US, and majority of small cap companies might come from this segment in the US. So buying broader index when the interest rates are going down and manufacturing is happening, be it like goods manufacturing or software manufacturing in the US, it's a healthy sign and it kind of makes sense to invest some money here. My last bet will be Bitcoin. I'm already aggressively buying it. I do believe that Bitcoin is a great neutral currency to which a lot of countries will move eventually, and it's a great bet. So I am putting money strategically into it. Again, I explain all this on my US based community. In case you guys are interested, you can check it out. Maybe I'll make a separate video on why I believe that BTC or Bitcoin will become the reserve currency of the world, or a part reserve currency of the world. But I hope you enjoyed this video. It gave you clarity on how to design your portfolio. If it did, do press the thumbs up button and I'll see you soon.